A grown man weeps over his steering wheel as $170,000 evaporates into thin air. You aren't buying a car. You are walking blindfolded into a meticulously engineered financial slaughterhouse. Watch until the very end, because the $1.5 trillion trap designed to bleed you dry has finally snapped shut. Stare directly into this screen for a moment. Imagine holding a crisp, legally binding promissory note bearing the staggering figure of $400,000 for a Rolls-Royce, a mechanical masterpiece that absolutely no one on this earth is willing to buy today, even for half that price. Picture a short, grainy video clip of a grown man, a proud Maserati owner, completely breaking down, weeping over his hand-stitched leather steering wheel. He has just realized that his gleaming, high-octane sculpture has evaporated $170,000 of his life's work in a mere 24 months of driving. These are not carefully scripted Hollywood dramas. These are the brutal, unfiltered documentaries of a colossal financial iceberg melting right beneath our feet. A catastrophe we now call the car market crash. The bitter warnings we arrogantly ignored during the intoxicating era of cheap, free-flowing money have mutated into a naked, terrifying reality. At Credit Card Payoff Plan US warmly welcomes you to the darkest corner of the automotive world. Before we dissect this financial massacre and pull back the curtain on what is truly happening, I urge you to hit that subscribe button. Your support is the vital heartbeat that gives this channel the drive to keep uncovering these harsh, untold truths for you. The post-COVID car bubble, artificially inflated to grotesque proportions by sheer human greed and catastrophic financial illiteracy, has violently shattered as we crossed the threshold of late 2024 and early 2025. We are watching a lethal, high-stakes game of financial Jenga, and the foundational blocks named liquidity are being aggressively ripped out. Tens of thousands, perhaps millions of everyday consumers are currently being dragged kicking and screaming into an abyss of inescapable debt. This collapse is not a sudden, merciful explosion. It is an agonizing, slow-motion erosion of wealth, meticulously crafted by a deadly cocktail of compounding debt, stubbornly high interest rates that mercilessly chew through daily cash flow, and asset values in a relentless, terrifying freefall. The very concept of an asset has been perverted. These vehicles have morphed into cannibalistic liabilities, quietly eating away at every hard-earned dollar of the middle class. Let me be absolutely clear about my intentions here today. I did not sit down to write this analysis to satisfy some twisted sense of schadenfreude. There is absolutely no joy in watching desperate people gasp for air atop a mountain of burning paper money. Instead, consider this a profoundly bitter pill to cure a fatal disease, an agonizing but necessary masterclass in financial survival. We are going to take a scalpel to the shadows of those blindingly lit, luxurious showrooms and surgically examine how money truly flows and dies within them. Most importantly, this sprawling macroeconomic nightmare serves as the ultimate, undeniable manifesto for radical consumer intelligence. It proves, without a shadow of a doubt, that true peace of mind means driving a fully depreciated, used vehicle, fiercely protecting your own financial oxygen, and absolutely never allowing yourself to become a hostage to a predatory credit contract disguised as a four-wheeled status symbol. You are about to see exactly why everything you thought you knew about buying cars was a meticulously engineered trap designed to keep you broke. To truly understand how this engineered trap closes around its victims, we must step out of the shadows of the aftermath and walk directly through the sliding glass doors of the modern auto dealership. This environment is meticulously designed to disarm your financial logic, replacing it with a potent, intoxicating cocktail of desire, status, and the deceptive promise of affordability. You do not walk into a showroom to buy a machine. You are ushered into a psychological theater where your deepest insecurities and aspirations are weaponized against you. During the peak of the bubble, we witnessed the complete perversion of the financing model. The age-old wisdom of a 4-year loan was quietly buried, replaced by the monstrous 84 and even 96-month lending terms. These financial instruments were not created to help the working class afford transportation. They were engineered by predatory lenders to mask wildly inflated sticker prices behind the ultimate illusion of the palatable monthly payment. The finance manager's office is the slaughterhouse where future wealth is systematically butchered. Sit in that leather chair and you are no longer a buyer. You are the product. They slide a piece of paper across the desk, completely obscuring the catastrophic total cost of ownership, the compound interest that will bleed you dry, and the dealer markups that add absolutely zero intrinsic value to the metal you are purchasing. They focus your eyes entirely on that single monthly figure, convincing you that if you can just barely squeeze it into your current budget, you have somehow outsmarted the system. It is an emotional hijacking. The scent of new plastics and adhesives, the blinding glare of LED headlights in the showroom, the subtle flattery of a salesman congratulating you on your success. It all serves to numb the terrifying reality that you are signing away the next 8 years of your financial life. You are actively agreeing to work thousands of hours at your job, sacrificing time with your family, your physical health, and your mental peace simply to pay interest on a depreciating liability that begins dying the very second its tires touch public asphalt. We watched in horror as ordinary people, driven by the frantic fear of missing out, gleefully paid $10,000, $20,000, even $30,000 over the manufacturer's suggested retail price. They convinced themselves that cars were suddenly appreciating assets, ignoring a century of automotive history that dictated otherwise. The banks enthusiastically rubber-stamped these absurd loans, fully aware that the collateral securing the debt was practically worthless compared to the ink on the contract. They preyed upon the profound financial illiteracy of the general public, wrapping highly toxic, explosive debt in the shiny, metallic paint of a brand new SUV. The consumer leaves the lot feeling like royalty, completely oblivious to the fact that they have just shackled themselves to a rapidly sinking ship. They traded their future sovereignty for a fleeting rush of dopamine, a high that evaporates almost instantly, leaving behind nothing but the cold, relentless machinery of a loan that will outlast the mechanical integrity of the vehicle itself. Once that initial dopamine hit fades, and the intoxicating new car smell is inevitably replaced by the sterile, suffocating scent of mounting bills, the mathematical reality of what was signed in that finance office brutally begins to surface. We are currently witnessing an epidemic of negative equity unlike anything the modern economy has ever endured. Being underwater on a car loan is an abstract financial term until it suddenly becomes a deeply personal, terrifying cage. Imagine waking up one morning, realizing your life circumstances have changed. A job loss, a medical emergency, a shifting economy, and you need to sell your vehicle. You look up the trade-in value and your stomach plummets. You owe the bank $65,000. But the open market is violently rejecting your car, offering a meager $38,000. You do not own a car. The car owns you. You are trapped by a $27,000 phantom debt, a gaping hole in your net worth backed by absolutely nothing but your legal obligation to pay. This is the agonizing reality for millions of Americans right now. The depreciation curve, which was temporarily suspended during the artificial scarcity of the pandemic, has returned with a vengeance, steep and unforgiving. As the value of these vehicles plummets at a record pace, the loan balances, front-loaded with heavy interest payments, barely inch downward. It is a mathematical death spiral. Desperate consumers attempt to escape by trading in their underwater vehicles for cheaper ones, only to be convinced by predatory dealers to roll that negative equity into a new loan. Suddenly, you have a college student driving a standard entry-level sedan but carrying an $80,000 auto loan because the ghost of their previous financial mistake is welded to the chassis of the new car. It is an insidious cycle of refinancing failure. The psychological toll of this reality is staggering and largely unspoken. It is the quiet desperation of the middle-class professional gripping the steering wheel on their morning commute, feeling a profound sense of physical nausea, knowing they are driving a financial prison. It is the paralyzing fear of the check engine light, because any major repair on top of the crushing monthly payment will bankrupt them. And inevitably, for a rapidly growing segment of the population, the math simply breaks. The payments stop. Then comes the ultimate indignity, the repossession. It is a deeply traumatic, visceral event. The tow truck arriving in the dead of night, dragging away the very symbol of their perceived success while the neighbors watch. The car is auctioned off for pennies on the dollar, but the nightmare does not end. The bank sues for the remaining deficiency balance. The victim's credit score is obliterated, locking them out of housing, fair insurance rates, and employment opportunities for nearly a decade. They are left with nothing to show for their thousands of dollars in payments, but a ruined financial reputation and a profound, lingering shame. This silent epidemic of midnight repossessions and shattered personal finances is not contained to individual driveways. It is a highly contagious rot infecting the very arteries of our broader macroeconomy. What begins as a personal tragedy for the over-leveraged consumer quickly metastasizes into a colossal systemic vulnerability. We are looking at over $1.5 trillion in outstanding auto loan debt in the United States alone. A terrifying percentage of that debt is subprime, granted to borrowers who had no mathematical business taking on such staggering liabilities. The financial institutions packaged these risky loans into complex auto-backed securities, selling them off to global investors hungry for yield, operating under the dangerous assumption that people will always pay for their cars to get to work. It is an eerie, terrifying echo of the 2008 housing crisis, only this time, the toxic assets are rusting in driveways rather than sitting on manicured lawns. As default rates violently spike, the banks are hitting the panic button. Lenders are aggressively tightening their requirements, slamming the vault doors shut on the easy credit that fueled the automotive boom. Dealerships, once arrogant and practically ignoring walking customers, are now staring out at sprawling lots choked with inventory they drastically overpaid for. They are paying crippling floor plan interest on thousands of vehicles sitting stagnant, baking in the sun. To survive, they are forced to slash prices, which violently accelerates the depreciation of the cars already on the road, plunging even more current owners deeper into negative equity. It is a catastrophic feedback loop of collapsing value. Automakers themselves are deeply complicit and now entirely vulnerable. They abandoned the production of affordable, reliable sedans, pivoting entirely to massive, hyper-expensive trucks and luxury SUVs, addicted to the fat profit margins those vehicles provided during the era of free money. Now they are standing on assembly lines producing $90,000 behemoths for a consumer base that has been financially eviscerated by inflation and interest rates. You can see the panic in the boardroom as they suddenly flood the market with desperate incentives, cash-on-the-hood rebates, and subsidized financing rates, desperately trying to keep the illusion of demand alive. But the damage is done. The broader economic impact is chilling. When the average family is funneling $1,000 a month into an auto loan, plus exorbitant insurance premiums and fuel, that capital is violently extracted from the rest of the economy.
They cannot save for a down payment on a home. They cannot invest in retirement. They cannot support local businesses, and they cannot weather even the slightest financial storm. The automotive debt crisis is not just a car problem. It is an economic anchor dragging down the aggregate demand of the entire middle class, pushing the fragile economy ever closer to the precipice of a severe, prolonged recession. Yet amidst this crumbling architecture of automotive debt and systemic rot, there lies a profound, life-altering opportunity for those courageous enough to break away from the deeply conditioned herd. The collapse of the car market is not just a financial cautionary tale. It is a radical awakening. It is a brutal but necessary tearing down of the illusions that have kept hardworking people trapped in a perpetual cycle of wage slavery. To witness this crash and understand its mechanics is to be handed the blueprint for total financial sovereignty. The ultimate rebellion in our hyper-consumerist society is not what you buy, it is what you vehemently refuse to finance. True wealth is quiet, invisible, and remarkably unconcerned with the opinions of strangers at a stoplight. It is the profound peace of mind that comes from driving a fully depreciated, mechanically sound, 10-year-old vehicle that you own outright. When you hold the physical title to your car, you hold a tangible piece of your own freedom. You are immune to the terrifying depreciation curves. You are insulated from the predatory interest rates. You are completely detached from the fragile egos that require a gleaming hood ornament to validate their self-worth. Every single month, the hundreds of dollars that would have vanished into the greedy vault of an auto lender remain in your accounts. That capital becomes the seeds of your actual wealth, flowing into investments, emergency funds, and genuine assets that pay you to own them, rather than charging you for the privilege of looking successful. Let the masses fight over the rapidly depreciating metal. Let them stress over door dings and panic over interest rates. Your path is different. You must view a car for exactly what it is: a utility, an appliance, a simple tool designed to move human beings from point A to point B. It is not an extension of your personality, and it is certainly not a measure of your human value. By stepping off the automotive treadmill, you reclaim your future. You fortify your personal economy against the macroeconomic storms raging outside. This is the ultimate lesson of the great car market crash. Do not be a casualty of the illusion. Protect your cash flow with ruthless discipline. Drive the paid-off car with absolute pride, and recognize that the greatest status symbol you will ever possess is a life free from the suffocating grip of consumer debt. Thank you for joining me in the shadows today. Stay vigilant, stay disciplined, and I will see you in the next deep dive. The devastating collapse of the 2026 auto market is far more than a simple correction in vehicle prices. It is the violent unraveling of a predatory financial ecosystem designed to extract generational wealth from the middle class. For years, the industry thrived on an illusion, weaponizing human insecurities and status anxiety to trap consumers in catastrophic, long-term debt.
Buyers were blinded by the dopamine rush of a new vehicle, willingly shackling themselves to depreciating liabilities, while banks and dealerships masked the mathematical reality behind 84-month loans and toxic negative equity. As default rates now surge and repossession trucks claim the driveways of over-leveraged Americans, the systemic rot has spilled over into the macro economy, destroying purchasing power and pushing the financial system toward the brink. Yet this crisis serves as a powerful awakening. It exposes the absolute absurdity of sacrificing your financial future, your peace of mind, and thousands of working hours merely to finance rapidly decaying metal. True wealth is built in the shadows, far away from the blinding lights of the dealership showroom. By breaking free from this hyper-consumerist trap, recognizing vehicles strictly as utilitarian appliances, and fiercely guarding your cash flow, you can insulate yourself from this economic fallout. The ultimate victory is stepping off the treadmill of debt, reclaiming your capital, and building genuine financial sovereignty that no bank can ever repossess. The lesson to draw from this crisis is that tying your ego to a depreciating asset is a recipe for financial ruin. Society has conditioned you to accept a permanent monthly car payment as a standard fact of adult life, but it is actually the greatest wealth destroyer of the modern middle class. To apply this to your life right now, you must radically redefine your relationship with transportation. Strip away the emotional attachment to brand names and model years. If you currently drive a paid-off, mechanically sound car, keep it. Maintain it meticulously and drive it with pride.
Take the $800 to $1,000 you would have spent on a new car payment and full coverage premiums and automate that exact amount into investments or an emergency fund every single month. If you absolutely must replace a vehicle, buy a reliable, fully depreciated used car in cash. Defend your monthly cash flow with ruthless discipline. It is the only tool you have to build genuine, lasting wealth. Are you currently experiencing the freedom of driving a completely paid-off vehicle, or are you navigating a monthly car payment? Please drop your answer and share your perspective in the comments below so our community can read, compare, and learn from each other's financial journeys. If you found value in this deep dive, please hit the subscribe button to support the channel. Your subscription is what fuels this project and gives me the immense motivation to keep exposing the truth and creating high-quality, hard-hitting content for you in the future.